Nomad Podcast.
So, hey guys, and welcome back to another episode of Nomad Podcast. And today I have Patrick joining me again. Patrick, I know you already introduced yourself 3 episodes ago, but would you still quickly like to share your story, who you are, and what you do in the finance world?
Sure. Thanks, Janice. Thanks for having me back. I'm Patrick Wood. I'm the president and CEO of DelphX Capital Markets. We are a structured products company developing innovative, disruptive products for traditional finance markets. And one of our main products today is a hedge for and it's a very sophisticated. I would call it, instead of a hedge, a sophisticated risk transfer strategy for institutions, i.e., treasuries, funds, and others who have larger holdings in Bitcoin and other cryptocurrencies to protect themselves against downside, big shocks in the price of cryptocurrencies. In a way that is fully collateralized, that relies on no counterparties to essentially guarantee that the protection is going to be there. So we're really the only group out there who really believes when it comes to the treasury and fund space in cryptocurrencies that protected capital attracts capital. And since, Janice, you and I last spoke, I guess it was maybe about a month and a half ago, things have clearly changed quite a bit. So we're here not to say I told you so, but more to say, hey, we're still here. And, if you haven't thought through, the right strategy on protection, then come to us because we can help you out.
So that's cool. Well, told you so. But so Patrick, if we were supposed to rewind January 2024, and every treasury, crypto treasury, Bitcoin treasury, whatever, had a basic hedge in place from day one, where would they be, and where would the average holder be? Sitting right now, it's like November, and October, November were like not great months, especially for Bitcoin, since we went from 126K, which was like the new all-time high, to now like 88K, 87K. I'm not sure what the exact price is right now, but what would the best advice for those guys be right now, or holders generally, because not a great feeling right now,
So that's a good question. So I guess there's two ways to kind of talk to that. One, our hedge is really designed as a passive hedge. The idea is that we believe that Bitcoin, and I'll just say Bitcoin rather than cryptocurrencies because I don't want to be too general, but Bitcoin in and of itself, we think is going to continue to do well. I think the long-term view is, you'd be fooled to bet against it. And to that end, our view is that if you're a large treasury, a digital asset treasury or a large fund, and you're buying and holding Bitcoin for capital appreciation, down the road, and you want to do some innovative, let's call it, lending, things like that. In essence, you want to turn yourself into a bank, which is where I think treasuries want to go. I think that's where people like Saylor and others, view themselves as displacing banks, which is cool. And I think that's a great business if it works. But in the meantime, though, to give up a little bit of upside to protect against downside shocks like the one we just saw, and, the one previous was in 2022, down 65%, 2018, I think we were down like 74%. It happens. And that's why Bitcoin is not really the right instrument for a treasury. It really, the idea of having a treasury, like, for example, MicroStrategy right now, 1,500 employees, they have, 150 million in debt payments coming up at the end of the year, and they only have 80 million in cash. Well, how does that work? And think about that overhead cost of 1,500 employees. Think about the infrastructure. Think about all those other things that kick in, and that's a bad model. But if you're going to do that, then you have a fiduciary responsibility to protect against the downside, because investors who are buying treasuries, there's a greed factor. They think MNAV's going to stay above 1 forever, et cetera. But that's not true. Going back 30 years, any closed-end fund, which is essentially what a treasury is going to trade at a discount to NAV. It's just 10 out of 10 times in 30 years in my business, in my experience, that you're never going to really get a sustained MNAV above one. Like I said, closed-end funds, which is essentially what a treasury is, that's where they are. I think the second thing is, though, so once again, our idea is, as a treasury, give up a little bit of upside every year. So, for example, if you put this hedge on back in January, I don't know where Bitcoin was at that point. The idea, though, is when there's a big shock to the system, like Bitcoin sells off, below 15%, you're protected. And not only that, you market yourself as being protected. You're preserving capital, which is the number one role of a treasury, and you're protecting your investors and shareholders. And then three, then you can do interesting things as the currency and the value of it climbs, sustained over time. And you have to take a long-term view. So once again, you put on the hedge every year. That way, at least, you're differentiating yourself. You've got something very sophisticated as far as risk transfer goes. And you're doing your job as a treasury should. The second thing, obviously, is that when people are looking at Bitcoin, and this goes back a month and a half ago when Bitcoin was at 126,000, as you mentioned. There's always this exuberance and blinded exuberance, and no one's better at blinding people than people like Michael Saylor. Telling people that, this is going to go on forever, that, there's a normalization in the price of Bitcoin, that kind of stuff. It's great branding. It's great marketing. It's great advertising, but it's clearly not true. But everyone always buys it, hook, line, and sinker. Wall Street buys it. The treasuries buy it. Everyone buys it because everyone thinks about greed. No one thinks about safety. And one thing we've learned marketing our product across Wall Street and everywhere else is no one cares about safety. no one's even thinking about downside. And that's a really strange thing because, Janice, when everyone's thinking that way and no one's protected, then forget about Bitcoin dropping 126 down to 80 the other day, or I think it was below 80,000 the other day. I think it was 79,000. Think
Yeah,
something. Yeah,
79. Yeah,
yeah, but think when there's a big flush to the exits and there's a few, bad dudes like, FTXs and others show up, which inevitably happens with these types of big moves, then you've got a complete washout. And I'm not going to bet on the lower price. It's certainly going to be below 50,000. And so that's where, once again, people should start thinking about risk management. And it's boring. I totally agree. Nobody wants to pay for protection. It's like buying health insurance. You don't want to buy it, or life insurance. Like, you don't want to do it, but it's just something you have to do.
yeah,
So our point is, hey, we told everyone about this, a couple months ago. You should have done it. You didn't. So now what do? Do you wait for the price to come back, which, surely it will? Or do you start hedging now and, have a concerted, kind of like a disciplined view to hedging, basically almost dollar cost averaging your hedging. So if you have $1 billion treasury, just do 100 million every month, hedge it as it goes up and just revolve the thing around. I mean, it's a pretty simple strategy. But it really does differentiate your treasury from everybody else's. But once again, getting to that view on treasuries, so far they've proven to be completely ineffective. With regard to being an actual treasury, like Metaplanet as an example, writing naked options, not disclosing the nature of those options. They were up until 2024, and this is also what scares me about the digital asset treasury space. There's very little disclosure out there. So, and I hate to pick on Metaplanet, but they're one of the few that, up until the end of 2024, were disclosing all of their options positions. Well, they haven't done that in 2025. Weird, right? Really strange. What is it that those guys are doing to generate, that these kinds of massive revenues? And so, once again, it's still a very nascent industry. Bitcoin is not going to take over fiat. It's not going to take over gold for a long time. It's still 15 years old, this thing. It's going to have a lot of lumps along the way. But if you're a believer in it and you see a long-term view, then you have to hedge as an institution. As a retail guy, who cares, man? You're just going to buy this stuff, hold it, sock it away in your 401k or something, and, hold on forever. But as an institution, that's the pool that we play in. So
I like it that you said basically Bitcoin treasuries don't work in the long run because they don't. I mean, what if the price starts dropping right now? Because I'm not sure if you heard the news, MicroStrategy or Strategy B now, what they call it now. Apparently they moved over $1 billion from one wallet to the other, and I was like, that's strange. He was like, never sell your Bitcoin, and now you're moving from like Bitcoin from like wallet to wallet. I'm about to sell like some Bitcoin, or by the way, he already sold some Bitcoin, like a few $100,000 in dollars to pay like taxes or whatever, or like to minimize taxes or something. So kind of like broke the spirits there. But Bitcoin treasury companies only work if the price keeps going up. What if it drops like right now? And I wrote an article about this like a few days ago, or 3 days ago, or 4 days ago. If it's just a hype right now in this cycle, I mean, next year will be like the correction phase of Bitcoin, right? So what will happen there? How many Bitcoin treasuries will fail, or generate treasuries which have digital assets in their company? So that's like also a risk you have to look at.
sure.
I
And there's
mean,
also, I mean, to that point, I mean, if that scenario plays out, like you're talking about, that there's, a real sell off in the space, that continues into next year. Well, that almost, like I said, it's a cascading effect, because these treasuries will be forced to sell, out of their holdings. They will be able, they have to cover their operating costs. And tell me, why does MicroStrategy need over 1,500 employees? I mean, come on, that's absurd. So just think about that. Like, just think for a minute. You're running a treasury, simple treasury company. What in the world do you need over 1,500 employees for? Like, think about the op cost on that. Your overhead is massive. And to your point, if Bitcoin is steady state, and if it's not rising, and even worse, if it's dropping, well, then you're going to have treasuries be forced to sell. And so then that's added pressure on the asset itself. So Bitcoin gets further smoked because you've got more supply coming on stream. And yeah, you could end up in a pretty ugly, bad situation for a while as these guys all blow up. To that end, though, my point is, if you're taking a long-term view, you're a treasury, and if you're running things very conservatively, which a treasury should, like maybe 50 employees is the right number for a big treasury like MicroStrategy. That sounds like a reasonable number to me, because it's not rocket science what they're doing. I mean, it's really not. But if you are hedged on that downside, and you're taking that view and you're sharing that with everybody, you're telling the world, hey, you know what? We don't care if Bitcoin drops, because we're hedged and we have protection mechanism in place. Then at that point, you're still going to trade at a discount to MNAV, 100%. But when Bitcoin goes up, you're going to be the only guy standing when everybody else is smoked, in the scenario that you described, where Bitcoin has a bad 2026. I mean, that's where you cannibalize everybody else. And that's when you really show the world how to build a proper treasury around Bitcoin. And then, obviously, like I said, I think it'd be nuts to not have the view longer term that Bitcoin won't be eclipsing those old time highs. I think it will, but who knows when that's going to happen, and who knows the carnage and whatever can happen in between. So, yeah, I think there's a lot of scrutiny now coming into the digital asset treasury space. I think people were completely unprepared for a sell-off, because they were all drinking the Kool-Aid. And to tell you the truth, I can't tell you how many people on the treasury side, like the larger treasuries, we showed our hedge to, who, really, they didn't even expect that hedging was going to be, part of their process. And to that point, they're all failures. Because if you ask me, anybody who rejected putting on a hedge and thinking about risk management, they should all be fired. Because if you're going to run a digital asset treasury, you have no business being where you are today, rejecting a protection mechanism for your shareholders, in a treasury setting. And once again, we spoke to so many people who are just total novices, who are filling these big seats, of these large companies that with, a billion, 2 billion in Bitcoin, and they have no business being there. It's unbelievable.
Yeah.
And all these people do is they just conference hop. They go from one conference to the next, and they're super busy, traveling around the world, blowing shareholder money for a treasury. I mean, come on, man. It's like enough's enough, right? So, but that's what
Yeah.
happens. It's part of the whole process, I suppose.
I mean, I also had when he was in Prague 2 years ago, I made like a few interviews, like with Jack Mallers, Adam Beck, Mike Sayer, like short interviews, like 5 to 10 minutes.
Yeah,
And I got to do an interview with him as well. And I asked him, well, how did you get into Bitcoin and generally like into the finance world and with MicroStrategy? What do you guys do? He was like, yeah, well, I got into Bitcoin because my company was basically fucked. Sorry for the
yeah,
language there, but
yeah,
that's
yeah.
why he got into Bitcoin. His company was basically a nobody. No, he's like into IT or business something or information something or
It's like
data
data
something.
centers or something like that.
Yeah,
Yeah,
yeah. But what the hell is that even? And second of all, how much like worth was he? He was like worth 500, or the company was like worth 500 million, which isn't a lot if you're like a data company, you know? Like there are
yeah,
data companies like Google, which are like worth billions, you know? So
yeah, yeah. Yeah,
for me,
look, I mean,
that was
yeah,
interesting, you know?
yeah, and to that end, I mean, look, I give the guy full credit. Like a guy
Yeah.
like, he deserves credit because he saw something, he took advantage of it, he built what at the time I think was a really cool structure. Um,
Yep.
the problem is, I think he himself drank the bullshit Kool-Aid as well, and the bullshit Kool-Aid. Like I said, I saw the guy at a conference at the beginning of September in New York, and it was so bad, the stuff he was saying about preferreds and his debt structure, etc. That once again, and even at that conference, actually, some guy came up to me and he said, and this is what really creeped me out. He said, "This is a movement, you know that." I was like, what are you talking about? This is not a movement. This is about finance. This is about numbers. It's not a
Yeah.
movement. And but once again, these people were all drinking this weirdo, like I said, the bullshit Kool-Aid, and buying every word that Saylor said, except for a few of us who sat outside the conference having a cigarette, basically saying like, "What the hell did we just hear? Does this make any sense to you at all?" And none of us we couldn't figure it out. But that being said, yeah, the idea that Saylor built a treasury around Bitcoin, 6 7 years ago. I mean, it's like good on him. The problem that he got into was the fact that during that period when he had such a good run, high MNAV, he didn't think about risk management. He just thought this was
Yeah.
going to go on forever and ever and ever. And that's what happens. Once again, how many movies do we see where some guy, hits it really, really well, and then he doesn't stop. And that's the thing. It's you have to be introspective in something like treasuries, and I don't think there was any introspection at all there. They were all just once again taking the money in and thinking that they were big, big fish kind of thing, which, like I said, consumes them. There was zero introspection there. I'm not
So
sure
would
there
you
is
then?
any introspection there anymore, too. I mean, at this stage, these guys are all
Okay.
shell shocked. All the treasuries are shell shocked, Yanis. So all the guys we're talking with, they're just stuck. They don't know what to do next, and that's also an interesting thing to see. It happened so fast. Like literally, this whole
Yeah.
thing just collapsed in like a month and a half.
So
Not collapsed, but it's off like 35%. That's a big number, 35, almost 40% the other day. So, that's when you're running a treasury and you get smoked like that and you realize, you're not getting any more money and credit markets are frozen to treasuries completely. So now you're basically, well, how do I preserve what I've got? Once again, these guys should have been thinking that way 2 months ago. And they didn't. So
so would you then say that maybe his biggest, I wouldn't say mistake, but like, well, you could call it mistake, that he's actually cocky, that at the start the idea was great, but then he got more cockier, like, I'm now the God figure in the space and do that what I tell you, because that what for me it seems and sometimes also looks like, because
yeah,
I know so many friends which took credits and loans to buy Bitcoin and used their house as collateral or their job as collateral or whatever, they just use
Yeah.
this stuff as
Yeah.
collateral, to buy Bitcoin, which in a sense makes sense, but if the price drops, it doesn't make sense. It has to go, the price should go, like, I don't know, should keep going up. But if it doesn't, well, you're screwed, right? So would you say the biggest mistake that treasuries could do is to get cocky or to get arrogant? Or what's the biggest mistake a Bitcoin treasury in general can do?
Okay.
Especially like,
So think about your friends, okay, who are borrowing to buy Bitcoin, right? What
mhm,
happens to them when the price, compresses or, declines, or it's steady state for a long time? What happens to those guys? They're fucked, right? I mean,
yeah,
literally. I mean, they really are. They have to start selling their assets, all the rest of it, right? What's the difference between your friends and a digital asset treasury? Like, right? There's no difference, right? Like, really, it's pretty much the same thing. And so the problem with people like Sailor is I can't really say what was going through the guy's mind or what wasn't going through his mind, and everybody else in the space too. Listen, it's not just him. He's just an easy target because he's the biggest
yeah,
and makes himself so readily available for criticism. But he just, once again, he wasn't introspective enough, and he wasn't realistic enough to know that this market was ripe for a big blow off. And it was, because no matter what anybody says, there was a lot of leverage. There were a lot of weirdo structures out there, well, anyway, the structures people know, like Bitcoin futures and things like that. There were a lot of, esoteric products coming down the pipe. There was a ton of free money just floating around, from like large private equity groups and others going into the space. And so these guys, basically, they had unlimited access to funds, essentially. And it's true, they kind of, in their minds, and to others, they became almost godlike, like you said, And like I
yeah,
said, when I was at the conference, a couple of months ago, the Bitcoin thing in New York, I mean, literally, everybody was just thinking this guy is God, except for a few of us. And the few of us that kind of questioned it, we certainly weren't the smartest guys in the room, far from it. And we still aren't that smart. Like, once again, we take no credit for being smart or intelligent. No, I mean, we really, we're just thinking more about, hey, how do you build a structure in this segment that avoids the kind of, stuff that just happened? So, for
yeah,
example, had Sailor hedged himself 2 months ago, when I contacted his CFO and we completely got ignored by him, they would have survived this and they would look amazing today because they would brand themselves as being fully hedged. Investors would feel comfortable. They would then cannibalize everybody else. But that CFO should be fired. I mean, don't get me wrong. That guy, his inaction to my emails to him and my outreach, that kind of guy should get fired immediately because he cost MicroStrategy billions of dollars in savings that they could have had by being hedged. And so that's what needs to happen to the industry next. Anybody who's not thinking about proper risk management in their treasury, they should all be let go. And anyone who we reached, and we have names, so any head of a company that wants to call me, get the people that we spoke to or contacted within their company, call me anytime. Happy to share the names with you because, like I said, fiduciary responsibilities are important, and the people who don't, understand that they have that responsibility and adapt, they have to go. It's plain and simple. That being said, though, I think the most important thing is what do people do next, and I think digital asset treasuries are probably going to feel consistent pressure going forward because the credit markets have frozen to them. They're not lending money to these guys anymore. Um, a MicroStrategy, I think S&P came out the other day, said they had a B- rating. I mean, that's one level above like pure junk. Okay.
mm,
And I think that rating, if S&P does another review on them, it's definitely going to be in the triple C area. It's not going to be in the B's anymore. And that's heavy, heavy debt expense. So the idea of perpetual preferreds and $0 convertibles and all the pressure that their share structure is going to have on it for the next couple of years too, with all those converts, they're in a lot of they're not going to be shooting it out of the water unless Bitcoin comes back and starts eclipsing those all-time highs, which could easily happen. I mean, shit, that could
yeah,
happen. We could wake up, Bitcoin's at 150,000, and it's like, okay, cool, but if and when that
Wait, hold
happens,
on a minute. It's at 150K. It's like 2 a.m. in the morning. It's at 150K,
yeah,
people.
yeah,
You
of
know?
course. Yeah, why not, man? Yeah, but you know, you never know, right? I mean,
Yes, of
listen,
course.
the administration in the United States, as an example, could say, hey, listen, we're going to make this part of our treasury plan going forward,
Yep.
which they could do. That would ignite this sucker huge. And I think that's probably going to happen at some point. But
Yep.
in the meantime, start building in a small hedging strategy now and have it consistent, have it be a passive strategy and just have it roll over. Like I said, you take 10% of your treasury every month right now, put it aside in a hedge. And every year that, 10% comes due, you roll it over to the next. So the idea is as Bitcoin climbs, you're going to continue kind of beefing up that, that protection. But you're not just picking one point in time, you're kind of doing this consistently throughout. And
Yep.
to that end, hedge doesn't cost anything if you use what's called a caller strategy. So if you sell a call, you're covering that hedge immediately. So it's a zero cost game. You're just limiting some of your upside, which, right now, it's not a bad thing to do. You know, build in a zero cost hedge strategy, easy peasy. And you could use OTC options for the call. So you don't really care about counterparty risk or things like that at that stage. So, yeah, once again, and our point, by the way, too, with having a fully structured and fully collateralized hedge is if you're going to buy protection, if you're going to buy insurance, you want to buy the best insurance out there. And that's, kind of like I said, where we came in and designed a new product around hedging that is the best out there. So, sorry, I got to promote our hedge quite a bit as
No,
much as
no,
I
no
can.
worries, no worries, no worries. That's okay. But that's how you
But
do
it's not
business.
bullshit. Like
That's
it is actually, it's a real thing, right? And so it's
yeah.
defensible. It's 100%.
That's the finance world. That's how it works. Connections over connections. So, a next question for you then, and I think this one could be very interesting. Do you think that then maybe Michael Saylor and with MicroStrategy or Strategy B, how they call it now, is basically pushing up his own stock of the company. So with that he then can buy new Bitcoins for his Bitcoin treasury. And do you also think that the stock of his company, MicroStrategy, now has the best hedging instrument that treasuries could have? So is it the best way to hedge against maybe MicroStrategy or with MicroStrategy? So
Um, yeah. So look, whatever Michael Saylor can do to get a share price up, the guy's going to do.
Mhm.
And to that end, I mean, so he should. I mean, his job as as kind of the head of a big public company should be shareholder value and the ability to use that equity value to
Yep.
kind of raise capital going forward. The problem is, and this is pretty important too, is like when you're issuing new equity all the time, and I know this because we have this tiny little public company that we've been running for years. We know the effects of dilution. It sucks. And so in his world of treasury, if Bitcoin stays steady, or if it doesn't have the big rises that it had, or even worse, if it drops below where it is today and stays there for a sustained period, and once again doesn't hit those all-time highs, then in that scenario, um, he's using, equity value, diluting the heck out of the common shareholders. Essentially, once again, he's diluting the value of the treasury at that point. And, it's definitely a very ballsy move. So for example, if he raises equity here and if he uses the equity money to buy Bitcoin, I mean,
Yep.
he's taking a big view on the price of Bitcoin and saying, I'm gonna catch a falling knife down here, or I think it's kind of based out, and if I buy now, it's going to come back. Um, I can't really talk to that strategy because it could work. I mean, the guy could come out and if
Yep.
he starts buying Bitcoin here by using equity to do it, I mean, that could work out really, really well. It's like I said, if Bitcoin shoots up to like an all time high, then dilution aside, he's done a remarkable job picking the bottom and riding another wave up, which, like I said, could easily happen. And I don't think he needs to do anything at this stage other than cut his operating costs down to like 10% of what they probably are today, and at the same time preserve capital and hedge, protect against that downside, and pay up for it. Once again, give up some upside to put on some downside protection, but still capture some upside, if and when things come back. And once again, dollar cost average that hedge. So don't hedge the whole thing today. Just, every month, take 10% of your position, hedge it, and just keep doing that on a revolving basis. You really do at that point, you take a great view on Bitcoin, the way that a treasury should. So,
Yeah. So here comes the question now. With January like Bitcoin treasuries and January what you said about risk management, what are other risks despite the price dropping and companies going bankrupt because of that? Or January, what are the risks? Because there's always a risk with everything. When you take medication, there's a risk, there's side
sure.
effects, right? When you invest into an IPO investment, there's also a risk that you could lose that money that you invest, right?
Sure.
So
Yeah.
what are the risks next to the price dropping and you going
Well,
bankrupt?
it's like anything else, man. I mean, it's almost like my little company, DelphX. I mean,
Mhm.
we are a binary outcome. People will either use our hedge or we go bankrupt. And you
Yeah.
shut the doors. So you really do have a binary outcome with all of these DATs out there. And to that end, though, I think the headwinds on them are probably a lot bigger than they are um, for most people's understanding. And the headwinds, as we mentioned, is that the MNAVs are going to get compressed. So they're actually going to, they're definitely going to go below one. So you're going to go back to the old-fashioned model of net asset value is actually going to be higher than the market value.
Yep.
So like any closed-end fund over the last 30 years, they've had the same experience. So that kind of enthusiasm that led market value over NAV to be 2, 3, 4. I mean, at some points it was like 10 times. That probably is done for now, at least. And it could come back, of course. But the other thing, of course, is these companies do rely on funding, and they rely on credit markets in mostly, and those credit markets are frozen. And so how long will it take for those credit markets to thaw? I mean, you look around at the private debt markets today globally, and they're getting punished. So
Yeah.
the AI trade is an example. That AI trade, you're talking trillions of dollars toward AI. Well, just as the tech market was in 1999, there was tons of stuff going into the internet at the time. Funny enough, MicroStrategy was one of the first companies to blow up in, I think it was March 2000, because they misstated about a year's worth of financial results.
Mhm.
Interesting, isn't it, that the same company, same people are
Yeah.
doing something today, 25 years later. But when the tech market blew up in 2000, MicroStrategy was the one that kind of led a lot of that by once again misstating their financial results and or overstating them. I don't know, but I should probably watch what I say. But no, but anyway, they were punished. It's all out
Yeah.
there. But yeah, I think the risks. I mean, they're all over the place. But I don't think you look at this from a perspective of like where's the next skeleton. I think you got to look
Yep.
at it as like, if I'm going to be involved in this, pardon me, I better take a long term view, and my long term view has to be like at least 5 to 10 years, and I need to be with the best management company out there, who are going to preserve capital for me. And I understand as an investor that, hey, you know what? I'm in this for the long run. I trust the management company. They're hedging my downside. They're giving me some upside. And if and when Bitcoin does another supernova to like 200,000, let's say, just throwing a number out there, then I'm
Yeah.
going to look dynamite. My MNAV is going to be back above one again, likely. So that's you want to find the best company out there or the best treasury if you're going to be in the treasury world. If you're a Bitcoin holder, normal guy like you and me, I mean, you're just going to
Yeah.
have your own wallet. You're going to probably have like, a hard wallet, and you're just going to keep accumulating. And it's like I said on another podcast the other, maybe about a month and a half ago, the great way for retail people to buy Bitcoin is just every month, just set aside some money, buy it, no matter what the price is. Just
Yeah.
keep buying it every month, and be that long term view. But certainly don't borrow money to buy a volatile asset like Bitcoin. It's insane. Like you're
Thank you
absolutely,
for saying that. Thank you.
yeah. I mean, borrowing money is like it's really really dumb. Like you, I have a friend who an old yeah, a buddy of mine who did the same thing. And, it's just, no, don't do it. Bad strategy. If you have money, use it, buy the Bitcoin. If you don't have the money, don't borrow it to buy Bitcoin.
I mean, it's so funny. I every not every well actually every month, but sometimes also every 2 weeks I buy Bitcoin. Like it doesn't matter, $50, $100, 250
Sure.
bucks. I don't care. I just
Yeah.
buy them and put them aside. Because I know that that could be like an alternative if something should go wrong, or if I mean, I hope not a war, but what happens if you have to travel to a different country because your country is at war with a other country?
Yeah.
Would you like to take all your bags and backpacks and everything with gold filled and like with
Yeah. Yeah. Of
like
course.
your
Yeah.
dollar bills, or would you like to have a wallet which is digital on your phone filled with all your money, aka Bitcoin? That's the best way, right?
Yeah.
So
Yeah,
that
man.
brings me to maybe our last question. I hope it's not the last question because I still have so many questions. But with 2026 shaping up to be a actually liquidity wise, it should be a positive year, right? With Fed cuts and policies, which should be positive, affecting actually, but for some reasons they are not.
Yeah.
Um, knowing what you know now and what we know now, what's the minimum viable hedge a treasury, especially treasury like MicroStrategy as an example, should keep in place even in a bull market or bear market scenario?
So, 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 um, so you asked me what's the minimum hedged? Is that what you're thinking, or?
Yeah, minimum hedge. Maybe I should have said maximum hedge, but it doesn't matter, minimum or maximum hedge.
Okay. Yeah. So once again, as we go forward, so the key part of any treasury is preservation of capital, right? And so treasury should have a treasurer, and that treasurer should be somebody who really understands that the treasury has to preserve capital at all costs. Um, Anything above that preservation of capital, once it's achieved, so if you end up with an MNAV above one, like let's say 1.5 or two, go ahead, raise some equity even at that point, to do interesting things or become, like I said, that bank that all these guys wish I mean, that's their model, right? They want to start lending, they want to develop credit products, around, the goalposts that they can within that treasury. And, so they want to disrupt the system that way, and like I said, become banks. Um, I don't know if that's a good move or not. All I can say though is that if um, if I'm a treasury, I really do want to make sure that that anywhere that I can minimize risk, I'm going to do it. Now, I don't mind taking on some risk when things are really good, and it's concerted, it's thoughtful risk. But I'm certainly always going to be focused on that preservation of capital theme first. So as a treasury, I'm always going to be 100% hedged. That's the only place for me to be. It's the only responsible thing to do, and it really doesn't cost you anything because you give up some upside. You build in a caller, you pay for the hedge with the selling of that call or calls, and or at least most of the hedge. And I think that's really, once again, that's the way to think about it. So I think the headwinds on treasuries, with Bitcoin staying where it is, it's going to be really hard for these guys to survive. I think, half of them by next year, this time, minimum, are going to be out of business. Um, Probably more like 75, 80% of them will be gone. And there's a bit of a trade in that too. Do the big guys have the firepower to accumulate the little guys? Who knows? Because that is actually a good strategy. If you're a big, big treasury today, and you can buy some of these little guys up, for let's say half of NAV, that's a good trade, because you're punting out the management groups all their operating costs. You're getting their Bitcoin for half value. Why they haven't started doing that yet is beyond me. But the sleaze on not the sleaze, but the investment bankers will be on that pretty fast. So to that end,
Of course.
that's actually hopefully that happens, because that could save the business a little bit. But once again, if Bitcoin does come up this year though, and has a banner year, these guys are all going to be given new life. But that scares me, Janice, because if that happens, then the next market fallout is going to make this one look like a nothing, because they will, once again, that mentality that you were talking about, it will consume them again, and they'll shoot for the moon. So
It will be like a bubble which didn't burst but just got
yeah,
bigger, and eventually it will be like this huge and then it will burst basically. So for 2026, you would say that if everything goes well and the price goes up again, they can be safe. But if it keeps going on like this, around 80K something, you would say
yeah,
that maybe some of them will
yeah,
fall out of business.
yeah. If Bitcoin stays the price that it's at today, 75-80% of those treasuries that are out there today are gone. Clearly,
Okay.
yeah, they're gone. They can't sustain their operating costs, and they will be forced to start selling their holdings. And the minute you start selling your holdings, then
Okay.
you basically you lose credibility with your shareholders immediately. And and what amazes me so much about Bitcoin too is just how fast this sucker moves. Like in 1.5 months, you have these big sell-offs, like 35-40%, like almost overnight. And so that asset, just in and of itself, just the nature of that asset should not be in a treasury. But if you're going to make a treasury around it, make sure you put in that safety net. So once again, they all drink the Kool-Aid. If this thing's back to 150,000 or 200,000, oh my gosh, be high fives all around, and that'll be it.
I think they don't realize how dangerous it is to assume that the price just keeps going up and that everything is fine in the world. I mean, look what happened after President Trump announced that they will bomb Iran, or that when he announced that they bombed the facilities in Iran,
Sure.
the nuclear facilities. How the price immediately dropped to like 104K, I think, or 105K from like 112 or something. I mean, that's huge. And
Yeah.
imagine now a scenario where we hear like China invading Taiwan, or Russia-Ukraine war, for example, or a second
Yeah.
Russia-Ukraine war. I don't know. No, that can also affect the price. Hence, also those treasury companies, right? And if they don't have risk management, well, they're screwed, right?
That's it,
So,
man. Yeah.
but dear people, I think we came to an end with this episode.
Cool, man.
And dear Patrick, I have one more question for you before I'm gonna leave you be, for the evening and for the day. Where can people contact you personally or business related, or find
Thanks for
you?
Thank you for asking, Janice. So we have a website. It's www.delphx.com. So DELPHX.com.
Yep.
And they can reach us through there. And the email is info@delphx.com. And that goes to one of our folks, and they'll pass it on to me. So always reach me out, reach for me there. I think I'm on LinkedIn too, so people can search me up on LinkedIn. So
Yeah, you're as well. You're as well. So
I hope.
so dear Patrick,
That's the thing. I
thank you
don't
for.
run social media at all. I have no
Yeah,
idea what's
okay, yeah, that's fair enough. Me neither.
good.
Well, actually, I
Good
do.
hands. Good
But
hands. Yeah.
yeah. So, dear Patrick, thank you for joining me today, and dear people, as
Thanks,
usual,
Jim.
thank you for joining us today. Have a great day. Bye.
Great seeing you again. Take care.
Nomad Podcast.